S&P 500 sees a remarkable surge in Q3 2025 earnings, the Magnificent Seven at the forefront. In an exciting twist this quarter, the so-called Magnificent Seven, which includes industry giants like Microsoft, Meta, Amazon, Apple, Nvidia, Alphabet, and Tesla, are at the helm of the S&P 500's outstanding third-quarter earnings, significantly enhancing both investor enthusiasm and overall market dynamism. As we delve into the bustling third-quarter earnings season, we find ourselves in the second busiest week, where a total of 135 companies from the S&P 500 are set to unveil their financial results. Noteworthy names scheduled to report their earnings include Palantir, PLTR, Pfizer, PFE, Yum! Brands, Yum!, Emerson Electric, EMR, McDonald's, MCD, Humana, HUM, and Qualcomm, QCOM. Additionally, on Saturday, Warren Buffett's Berkshire Hathaway, BRK/A, BRK/B, released earnings that surpassed expectations, showcasing a notable performance. For deeper insights into these results from Berkshire Hathaway, check out this detailed analysis here. https://bill_stone/Berkshire-Hathaway's-Q3-2025/11/02/Buffett's-next-chapter. So far, as we've observed, 64% of the reporting companies have released their financial data, with an impressive 83% surpassing analysts' earnings forecasts. For an early look into this earnings season and the factors contributing to these outcomes, you can refer to last week's earnings season preview here. https://www.forbes.com/sites/bill_stone/2025/surge-magnificent-7-lead-as-recession-odds-plunge. Earnings overview. Combining the reported results with the expected figures from companies yet to announce, the S&P 500's blended earnings growth rate for this quarter stands at an impressive 10.7% compared to the same period last year. This marks a noticeable rise from the initial expectations of just 7.9% recorded at the end of the last quarter. Projections for earnings growth in 2025 and 2026 have also been revised upwards, now predicted at 11.2% and 14%, respectively. Market performance insights. The strong earnings performance has been a vital factor lifting the S&P 500 this past week. The success of the Magnificent Seven, comprising Microsoft, MSFT, Meta Platforms, Meta, Amazon.com, AMZN, Apple, APL, Nvidia, NVDA, Alphabet, GOGL, and Tesla, TSLA, has been particularly noteworthy, as they have significantly outperformed the market overall. These 7 companies are indispensable to the growth of earnings and account for a substantial portion of the S&P 500's total market capitalization, making them essential focal points during this earnings season. Although Tesla, TSLA, and Meta Platforms, Meta, experienced some setbacks, the rest of the group compensated effectively. The consistent performance of companies like Alphabet, GOGL, Microsoft, MSFT, and Amazon.com, EMZN, reinforces the idea that the increasing demand for artificial intelligence, AI, technology is propelling robust economic growth. In a surprising twist, Meta Platforms, Meta, reported disappointing earnings figures primarily due to a non-cash tax charge, which alarmed investors. More unsettling was their announcement of an extensive commitment of over $100 billion towards AI advancements in the upcoming year. Yet, on a brighter note, their third-quarter revenues displayed a robust year-over-year growth of 26%, and their advertising segment continues to thrive, indicating a solid business foundation. Nvidia, NVDA, the last among the Magnificent Seven to report its earnings, is expected to release its results on November 19th. Sector-by-sector earnings insights. According to data from FactSet, the encouraging earnings surprises observed this week have primarily stemmed from businesses within the information technology, consumer discretionary, and healthcare sectors, which were the largest contributors to the rise in the overall earnings growth rate for the S&P 500. Conversely, the communication services sector faced challenges, largely due to the earnings miss by Meta. In the technology sector, it was Microsoft, MSFT, and Apple, APL, that emerged as the most significant positive contributors. In the consumer discretionary sector, Amazon.com, AMZN, delivered a surprise that exceeded expectations, while Eli Lilly, LLY, Merck, MRK, and Gilead Sciences, Guild, garnered attention in the healthcare sector for their notable performances. Sales across sectors have surged, with a growth rate of 7.9% that comfortably surpasses initial expectations. Impressively, 3 sectors are en route to achieve double-digit sales growth year-over-year during this quarter: information technology, communication services, and healthcare. What lies ahead this week? With the ongoing government shutdown affecting various sectors, the release of U.S. economic data is likely to remain limited. One significant report, the monthly jobs report, is expected to face delays due to governmental closures. However, the private ADP employment change report scheduled for release on Wednesday, along with the Challenger job cut announcement set for Thursday, will likely draw heightened attention from both investors and economists as they assess the current state of the U.S. labor market. As we navigate this second busiest week of earnings reporting, the anticipated positive earnings season appears to be firmly on track. However, the forthcoming reports from individual companies and their insights into future earnings expectations will be critical. In accordance with widely circulated expectations, the Federal Reserve recently enacted a 25 basis point, 0.25%, interest rate cut in its last meeting. Nevertheless, Fed Chair Powell's stronger-than-anticipated rebuttal against market hopes for another cut at the December meeting has shifted odds slightly, suggesting roughly a 2 in 3 chance of such an adjustment occurring. With various Fed members scheduled to speak throughout the week, their statements will undoubtedly be scrutinized for clues regarding potential easing measures in December. Engage with us. What are your thoughts on the earnings reports from the Magnificent Seven? Are you optimistic about the continued growth in sectors like AI and technology, or do you believe there are clouds on the horizon for the market? Share your views in the comments below.